Should you lock in your variable rate mortgage? No. 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 Okay, so here's a question on everybody's mind right now with the Bank of Canada increasing rates and subsequently all the banks increasing their prime rates. The question is, should I lock in my variable rate mortgage? So what we're going to do is approach this in two steps. First is we're going to look at the reasons why you shouldn't lock in your mortgage. The second is we're going to look at it from the perspective of why you should and when you should. And in the midst of that, what I'm going to do is I'm going to throw in a little bit of a story about ourselves and how locking into a 5-year fix was almost the biggest mistake we ever made. So let's start with the 5 reasons why you shouldn't lock in your mortgage. The first reason you shouldn't lock in your mortgage is if the interest rate that you're going to be locking into is higher than the rate that you've got on your current variable. You know, you took that variable rate out for good reasons when you started. To go and lock it in at a higher rate than what your current rate is pretty much takes away all the advantage that you were looking for when you first got that mortgage, when you first made that right decision. The second reason why you should take a variable rate is you should always take the lowest rate you can get when your mortgage is the biggest. If that means taking a variable rate or a 1-year or a 2-year, you always just take the lowest rate, because the time when the mortgage is the biggest and the amortization is the longest is when you're going to be able to save the most money. The third reason you shouldn't lock in your variable rate mortgage is the last time interest rates were this low was in the 1950s. And do you know how long it took for interest rates to raise just 5%? It took 30 plus years. So if you're thinking, oh shoot, I better lock in my mortgage because interest rates might go up 5-10% like they did in the 80s, well forget it. It's going to take a long time for interest rates to jump that far. And if the 50s were any consideration, you've got some time to think about your options. You know, during that period from 1950 to the 2000s, if you were to take a variable, you would have won 89% of the time. Now keep in mind, from 1950 to the 1980s, rates were going up consistently almost all the time. There were very little times when rates were actually coming down. Now, if you cut out the 20 years before that and you look at 1970 to 2000, you still would have won with a variable 74% of the time. So here's what you got to look at when you have a variable rate. And this is the fourth reason why you should stick with your variable. If the rate you can get on a variable is lower than the rate you can get on a fixed rate mortgage, you win almost 100% of the time. The only times where fixed mortgages really beat out variable rate mortgages is when the fixed rate is actually lower than the variable at the time that you get the mortgage. Remember, always take the lowest rate you can get. Sometimes that's going to be the fixed. Most of the time it's not. But when it is, you take advantage of it. And the fifth reason why you shouldn't take a variable rate or lock into a variable rate is the penalties. And this is where our story comes into play. You know, the first several properties I ever bought, I went variable all the way, across the board, every single one of them. And I never had more than a 3-month interest penalty. Then, when Jen and I had Jackson, we moved into a bigger house, we figured, hey, you know what? We're gonna take the fixed because it was such a low rate at the time. It was like 3.09%. And we figured, you know, the chances of rates going down were pretty much slim to none. Turns out we made a bad decision. Not only did rates go down, but about 3 years later, when we decided that we were going to start a business, we needed access to some of the equity in our property. You see, we had spent a lot of time increasing our payments in order to get our 30-year amortization down to an 11-year amortization. Then, when we needed the money out of the property, we went to the bank to refinance, and our penalty was $25,000. It should have been about $3,500. So that $25,000 penalty prevented us from accessing the money we needed to start the business. So what did we do? We started the business anyways, and you know what? It's gone great. But what ended up happening is we ended up using personal lines of credit. We ended up using other sources of borrowing in order to fund the business. I remember one February, we looked at it and we had $200,000 equity in our house, and we had about $4,000 in payments that we had to make, and we were just on the brink of not being able to make that payment. It was one of the scariest financial moments of my life, a moment I swore I would never find myself in. And the whole reason it existed was because we had that $25,000 penalty. We couldn't get out of the mortgage that we were in. If we had been in a variable rate mortgage like we had always told our clients to be in, and we would have been fine. 3 months interest penalty, $3,500. We would have borrowed the money on a low interest line of credit that was attached to the property. But that 5-year fixed mortgage and that $25,000 penalty almost caused us to miss the first payments we'd ever missed in our entire lives. So penalties are a big reason to avoid that 5-year fixed if you can. even if it means having a little bit of exposure on the interest rate. Because let me tell you this, if we would end up paying 1% higher in interest with the variable rate mortgage instead of the fixed rate mortgage, you know what? At least we wouldn't have had that $25,000 penalty. That 1% would have been far less than the $25,000 we had to pay on that penalty. So for the most part, variable rates make sense most of the time and for most people, but there are a few exceptions. There's 3 definitive reasons why you should lock in your mortgage, and they're really simple. The first reason you should lock in your mortgage is if you can get a fixed interest rate on a 1, 2, 3, 4, or 5-year term that is lower than the variable rate. The second reason is if your budget's tight and you can't afford the fluctuations in the payments. Now, this is a double-edged sword, because if your budget's tight and you can't afford the fluctuations, you really have to watch for what's going to happen 5 years out. Because in 5 years, if your interest rates go up, you're going to need to be able to budget for that. But for right now, if the budget's tight, a fixed mortgage is probably the place to be. That way you know your payments won't fluctuate. And the third reason you should probably get a fixed rate mortgage is if you're a first-time home buyer and you're buying at the maximum that you can afford, or if you got a gifted down payment. The reason why we're concerned about the gifted down payment is this: if you haven't had the ability to save money in the past, you likely can't afford fluctuations in the payments. So what we want to see if you get a gifted down payment is the ability for at least 5 years to make the payments on a consistent schedule. Now, most of the time when our first-time home buyers come out of their first 5-year fixed, we recommend that they get into a variable rate mortgage. Because at that point, they've got 5 years of managing money under the belt, and they're usually good to go. So I mean, there you have it. We've basically got 5 really good reasons not to lock in your variable rate. We've also got 3 really good reasons to lock in a variable rate. Regardless of what you do, just understand one thing. This is all about comfort level. If you aren't comfortable with a variable rate mortgage, don't lose sleep over it at night. In fact, when we sit down with clients and we ask a couple who's sitting across the table from us whether they would feel uncomfortable if interest rates were to go up overnight, if one of the two hesitates, we usually recommend that they go into a 5-year fixed, or at least some sort of fixed rate mortgage. By the way, we've had a lot of success with 2- and 3-year fixed mortgages as well, which has softened the happy medium between the two. So don't panic just because the Bank of Canada increased interest rates. Take some time, think about where you're at financially. If you can handle the fluctuations in payments, stick with the variable, because there's a really high likelihood it's going to save you money over time.